Welcome back everyone to another episode of Decoding IPOs by Finance and Instrument Cell of Kirori College. So Utkarsh this side, and in this episode of Decoding IPO, we will decode the IPO of Emmvee Photovoltaic. So Emmvee Photovoltaic, incorporated in March 2007, is a power integrated solar P module and cell manufacturer. And as of May 31st, 2025, the company has a solar PV module capacity of 7.8 gigawatts and a solar cell capacity of 2.94 gigawatts. And the company's product portfolio includes bifacial and monofacial top-on modules and cells and mono PERC modules. And the company has four manufacturing units across two Karnataka locations on 22.44 acres. And the company's customer base includes independent power producers, IPPs, and retails in commercial and industrial CI sector and engineering procurement sector. And if further look towards the company's IPO, and the company's IPO is a book build issue of 2,900 crore. IPOs are basically include on fixed or book build issue. In the fixed case, the company decide at which price the IPO will be allocated, and book build issue basically launches the price at the price interval. Let's assume in this case. Let's assume a company issue between the price range of 100 to 107. It means basically depending on the demand of the IPO, the price will be set. So the IPO is a book build issue of 2,900 crores, and the issue is a combination of fresh issue and offer for sale. Fresh issue of 9.88 crores and offer for sale for 3.48 crores. And the IPO bidding has started on November 11, 2025 and will close on November 13, 2025. With the credit of shares into demand will happen on November 17th with tentative listing date across NSE and BSE is November 18, 2025. And we further look towards the details of IPO. The lot size for individual investors 669 per share, and the issue price band is 206 to 2007. Means depending upon the demand of the IPO, the price range will be there. And if we further look towards the detailing, the investor category QIB shares offered are 75%, and NII HNI share is 15%, and retail share offered is 10%. Means the share will be allocated in this percentage. And if further look towards the IPO detailings, let's go towards the financial of the company. If we look towards the balance sheet, revenue has risen by 147%. Profit after tax PAT rose by 1,177%. That's amazing financial. But there's a huge red flag if you look towards the company is its debt. The total borrowing in 2023 was 519 crores, but in June 2025 rose to 232 crores, means nearly 400%. That's a huge big red flag. And if further look towards key performance indicator, the return on equity is 104%, return on capital is 23%, debt to equity ratio, that the red flag 3.6%. That's a huge red flag. If you look towards a company who's launching IPO and investing in a company is one of the major things when we invest in a company is looking towards the debt. And looking at the depth of Emmvee Photovoltaic, there's a huge red flag lies here. And if we go towards the IPO EPS, that is pre-IPO 6.22, post-IPO 10.84, and the piece from 34 to post-IPO 20. And if you look toward the object of issue, objective. So first of all, definitely, as we said, that is a huge flag. The company will use basically the IPO money for repayment or prepayment in full part, or like basically paying off debt and general corporate purpose like day-to-day workings. Now we look towards the GMP gray market premium of Emmvee Photonic. If we look towards the current GMP, it's zero. That's not a good thing for a share getting listed. And if we further look towards the GMP history, it was getting GMP 1.38%. Means that if you see there's a falling GMP from 9% to nearly 0%. And GMP is basically gray market premium. It means the premium the investors are ready to pay for a share. If in this case the share is getting listed, the get price range around 207, it means they invest the GMP if of rupees 3, it means 2010 means the 3 rupees is a premium the investors are ready to. In the case of Emmvee Photonic, there's zero. It means the investors are not ready to pay any premium for the share. It is also not a good sign for people who buys IPO for listing gains. Now coming to the last part of video, whether one to invest in the share or not. So there are two categories, listing gains or investing. If one is looking for the listing gains, MB Photonics is not the share one should look for. As we can see, the gray market premium, it is rate zero. So basically means the investors are not ready to pay any premium for the share. It also means that one can see less chances of any listing gains. Maybe the share can list 1-2% listing gain, but less chances. And for investing, the company's financials are definitely worth giving a bet, but definitely with a limited money and a high risk. And the huge red flags which led to this decision is the company's high debt. And but we can also see in the management and the promoter holding that there is around 80% promoter, means the promoters are confident about the company. So looking at the management and the IPO issue size, so basically the IPO money will gonna be in the paying of the debt, means the company has high chances of getting debt free by IPO or by the end of this next financial year. It means one can definitely invest in the company if has with a limited amount of money, with a high risk taking capacity, and this share is not for listing in. So this is the opinion. Thanks for watching the video. Please subscribe to Finance Investment Cell of Kirori College, and also definitely have a look towards our Instagram page FICKMC.